Hey guys, so today was not a better start to the week. Actually, honestly, despite the fact that the VIX opened almost 6%, or sorry, yeah, 6% green, and SPY was barely red. I mean, we were pretty flat for most of the time. Um, this morning, really until 10:30, the technicals were beautiful. So we had some nice movement up here for a call I took or sorry, a put I took, and then I took a nice call and got a really quick return on that. Great entry, great exit, great movement. For most of the first hour of the day, I was extremely hopeful that last week was just a blip in the past and that last week was really just, you know, part of the tribulations of trading. However, if you were trading today at 10:30, you would have noticed that out of nowhere, the option chains on almost all the major brokers just froze. So, of course, I was very timely in my entering of a call when that happened. And pretty much the second I entered, I noticed that my position wasn't moving. And of course, then that, thank goodness, the only thing good about that is that I do use OCO orders and I always have a stop loss on. So I was able to get knocked out with about almost a 13% loss, which is usually bigger than I would get filled at. But I am thankful and happy I had a stop loss on. But yeah, that was pretty much once those exchanges went down and were stopped working. After that, price action was terrible. So you can see we had just tons and tons of reversals all day long. Um, this was when the exchanges went down, and then we pretty much had a massive meltdown. And we looked like it was just a meltdown from basically the exchanges going down and that we were going to recover. However, what ended up happening was we just basically ended up in a very, very choppy, long term downtrend. And then about here, we started recovering, and then we just chopped in about a 17-cent range for almost an hour. Until the last 30 minutes of the day, we just had a super big meltdown. This was another day of a breakout trader's nightmare. So for me, if you guys know, I trade based on momentum and I trade on breakout patterns basically and continuation patterns with the candles. Absolute nightmare there today. Just basically, it would break out, retest the support like you're expecting, and then start to show you that it was going to continue that breakout. And if you entered on that continuation candle, you almost immediately were stopped out. I had probably some of my fastest stop outs consistently today. That was just basically entering, and then immediately as soon as you enter, it reverses out of nowhere. Sometimes it was just a stop loss hunt. Sometimes it was just a complete reversal. You have plays like this where we came down, you see we bounced, and it looked like we were going to break out, but then we get hard rejected, only to re-break out. So, if you played calls, you're expecting this continuation, which I know I did, especially after a nice double bottom. In the last minute of the candle, you rejects, only to then push higher, but then continues to reject. So it was just a very tough day of trading today. But let's take a look at where we're at here. So on Friday, we were in a bear channel, a black one here, but you can see we actually did lose support or we broke through resistance of that. So now we're kind of not really in this black one anymore. We're more in this red bear channel here. So you can see that upside resistance for tomorrow sits right here about 433. And downside support could go all the way as 426. Now, of course, I don't expect us to go to 426, but it just shows that the downside has plenty of room to fall. The most important thing I would take away from today, price action wise and supply and demand wise, is we did not establish a new demand. So that is still bearish for the markets until a new demand is put in. We also back-to-back rejected the AEMA. This is only, I believe, the third time since March we have put back-to-back days under the AEMA closure-wise. So definitely notable here. Pretty much at this point, we should expect a retest of the daily 20 EMA support. if we hold that support, and more importantly, if we backtest 429.8 and we can bounce off of that, I actually would feel more bullish. But as of right now, you can see we're pretty much look like we're in a really nice V top right here that's going to continue to come down. Now, to hold this March bull channel that we've been in, we really have quite a bit of room. So by, this is Tuesday, Wednesday. By Wednesday, we could go as low as 423 and still be in the same bull channel that dates back to March. Going over to futures here, same thing. We have rejected the 8 EMA. We do have a potential for a nice little double bottom back up here. However, now that we're under the 8 EMA here, really, I am going to be looking for 43.50 to be retested, which is the daily 20 EMA. I really don't feel comfortable going long until, one, we have a new demand put in, and two, we have retaken the daily 8 EMA. Going over to QQQ here, so same thing. We have a nice bear channel. We officially broke our bull channel that we've been in since April. So a little shorter term than the one that SPY is in. So you can see here, this is the March run up here. So really QQQ probably does have plenty more it can fall. If we take our high here and let's see, let's find our March. So there it is right there, March resistance, and go down and let's see where this puts us. So we just basically are looking for the lowest candle body, which would be right here on May 24th. So you can see we actually do have, I guess I got to go down just a little bit more. I didn't see the other one. There we go. So, I mean, tomorrow we could go as low as 350 and still be bullish. Wednesday, we could be down in the 351 area. So overall, the Qs remain in a bigger bull channel, but it did break its shorter term bull channel, the red one here. So that's definitely notable. So if you get rid of that right here, this is what we're left with. It looks pretty similar to SPY, honestly. So overall, that means that now that we've come so much closer to the daily 20 EMA right here, we really need to test it. So we did not quite get to this 357.1 supply to take it out. But realistic with the 20 EMA sitting right here at 356.5 and previous resistance, which is a supply at 355.2, that's pretty much my target. So I'm anticipating a little bit of a drop tomorrow, and that's pretty much perfectly our support line. So we could come down, bounce off 355.2, and then close back over the 20 EMA, and that would be a pretty sensible bottom before we see the next move up. However, if we close below the 20 EMA, and especially if we just continue a bigger drop, then really that's pretty bearish longer term, and I would be looking for a further sell-off. On the VIX here, we did put that demand in at 12.86, so we have officially taken out our 13.88 demand. So now you can see we didn't quite make it through 14.5 supply, and we still have our 16.02 demand to take out. So with a closure over the 8 EMA but under 20 EMA, this is the first time since really middle of May or end of May right here that we have had a bullish move up, so bearish for the markets on the VIX. So presumably if the bull bears can get us over the daily 20 EMA and preferably really over this 15 supply level tomorrow, then that really would be more of a sustainable downside that I see for the market. All right, hope you guys had a good day trading today. Remember, tomorrow's my last day trading this week, and then I will be gone the rest of the week, and I'll be back trading on Monday.